Hello traders and welcome to Trading with Bill, Options and Forex. Good to be with you on a Friday, end of our trading week, July 11, 2014. Traders, thanks for joining me again. We're here helping losing traders become winning traders. Great to be with you, coming to you live from Pattaya, Thailand. Cloudy, rainy skies, ugly beaches, rough water. Not a good day to be outside, but it's sunshine in my office. All right, traders, got a lot to talk about. I apologize. I missed the last 2 days, had some technical issues, and I can't believe it. The first time, I think 4 years, I actually had a think or swim platform problem, but kudos to them. They had it fixed in New York yesterday. Stayed on the phone with them for about an hour, and they fixed everything. Absolutely awesome. Great customer service. Put on hold, 3 minutes. Live technician. Wonderful. All right, traders, let's talk about, the legal stuff. Let's talk about the risk disclaimer. Forex and options trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the options and Forex markets. Do not trade with money you cannot afford to lose. Traders, the most important thing is that past performance of any trading system or methodology is not necessarily indicative of future results. All right, that is our risk disclaimer. Traders, let me introduce myself to you. My name is William Gilday, but they call me Bill. All right, so I started trading in 2006. In 2008, I retired from an awesome career in the fire rescue department out of the great state of Florida. Traders, 9 days later, I was on the big airplane coming to Thailand for a 3-month vacation after I retired. And traders, it's 2014, and I'm still here. The only smart thing I did was I packed all 3 of my laptops when I came on vacation, and I have been trading full-time every day in the Forex markets since. And I started trading options about 18 months ago. Started trading options, 19 months. So having a great time, enjoying what I do. I love being in front of my charts. I love talking to you every day, and it just helps me become a better trader. And this is what it's all about, just both of us helping each other and making those profits. Okay, let's bring it over here, and let's just discuss about some news. Okay, so went to my other screen, and I see a bunch of red, right? The Dow 30 down 0.42%. The S&P 500 down 0.41%. The NASDAQ down 0.33%. Unbelievable. Let's go across the other side of the pond and had more red. The DAX is down at negative 1.52%. The FTSE 100 down negative 0.68%. The CAC 40 down 1.34%. The Eurostock 50 down 1.57%. That's a big one. Okay, the Nikkei, which is still currently trading, I think, for about another half hour, is down 0.34%. The Shanghai is up at 0.39%. The Hang Seng is down 0.28%. And the S&P ASX 200 out of Sydney is currently up at 0.41%, with the Kospi down at 0.95%. All right, so what's going on today? We have high impact data today, and that is only on the Canadian. We have employment change, they're expecting 20K. And medium impact is unemployment rate, and they don't expect a change, remaining at 7%. All right, traders, let us take a look, and let's just chat about our friends. That's it, options. All right, traders, had some trouble with the Thinkorswim platform yesterday. However, we are back up and running, and the platform is back up, made some adjustments, made some changes. Didn't like the other chart setup. I have to be honest with you, traders. It was very hard to read and just didn't like it. So I've changed a lot of things, and I'm still making changes and stuff. I like clean charts. There was just too much on those charts, and they were just too complicated to read. So we made some changes. I hope you enjoy them. So let's talk about what happened at the beginning of the week. Wow, big down day, right? So remember, I talked about this on Monday that I thought that the market was going to take a breather and come back down. That these areas on a lot of these pairs that we looked at, not pairs, indices and stocks that we looked at, were at resistance. And I thought that was an issue and we needed to see what happened in the markets. And, sure as a dollar bill, what happens? They all start to drop off. I think this is the third day this week that the S&P 500, is in the red. So, I don't think it's a change of trend, or I don't think that the market's going to start dumping, but I think it's in a relaxation mode. It's taking a breather. And may I say, maybe profit taking, right? The big guys are taking profits, and that can be happening also. And if you believe in the manipulation of the markets, the big dogs, the big guys are basically bringing the market to the other side. So everything has been bullish, 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 and I'm still bullish. I've not changed my sentiment on that. And I was looking at these charts, and what I realized was, even if I did stay and I took these trades, I would have been fine, because when I looked at some of the trades I was looking at, I would have been fine. I wouldn't have been stopped out. I wouldn't have been in loss. But today's Friday, and we know what Friday brings, profit-taking day. So I wasn't too keen on staying in. I didn't even get into a weekly option, which is quite a bummer, because now we're 2 weeks with no weekly option. So not too happy about that. But I will look at the markets after, well, I should say right before New York closed, which is like 2 in the morning for me, and see if we can get into a weekly option for next week, and see if we can get and take advantage of the time decay, instead of just 4 days in the pair, maybe go 5 days in the pair. So that's something I'm looking at. All right, let's take a look at some of our option charts, and this is our new look on the Thinkorswim platform. The DNA indicator, which is the first indicator on the top, and the second indicator is the stochastics. So what we're going to do here is, I did change, after I made these slides, I did change the colors on the DNA to represent the old colors, so it's not as confusing. Also, okay, so this is the spiders, the SPYs, and look at how bullish this is. Now, we had 2 red days, opened the market at New York yesterday, opens down, then gives us some green at the end of the trading day, right? These are daily charts. So, if you take a look left of the chart, we did not hit support yet. So this basically is a bullish market, right? Bullish market. So we would have wanted to put on a bull put, and we would have been fine with this, and it just would have worked out. We would have still been in the market. However, we wouldn't have been in a lot of profit today. And my thing was, we're coming into Friday, and I want to get out of my trade on Friday. I did not want to be in the trade just 24 hours before the market closed for the week. So I stayed out, and I didn't get in any trades, as I said before. So that's what's going on with that. Okay, let's move along. And here we got the Russells, the ETF. Look at this move to the downside, huh? Unbelievable, right? So on this one, we would have put a bear call in, and this, would have been nice if we would have taken it on basically Friday of last week. If we would have gotten into this, we would have had some nice movement. Or Monday of this week, you see that big wick on that green candle there. That would have been a nice signal that the bulls were running out of steam, and maybe we wanted to take this to the downside. So next week, we're going to do a whole thing on the DNA indicator, so you guys can take a look at that and understand how I read it. So when you see it on the chart, you'll absolutely understand. It's very easy. It's not a hard, difficult indicator to read. So this is the iShares Russells ETF. We're going to take a look at the index on the Russells also. All right. Here's Wells Fargo. I brought out Wells Fargo because they had earnings release, and I like Wells Fargo, to be honest with you. But again, like everything else, I didn't just want to put indices in today's talk. I wanted to put everything in today's talk, and I threw a stock in here as Wells Fargo. And again, look at all these red candles. And yesterday we're seeing a little bit of green, and we're just going to have to wait and see how this works out. But we're hoping that this will turn to the positive side, and we'll continue our up mode. But I'm not ready to jump in these yet. I need some confirmation. But if you take a look left of the chart, you're going to see we're at price levels where this was previous support at the current price right now. It is what it is, but it is. All right, let's keep going. Lots to talk about today. We're going to be over our time, I think. Okay, here we go. Dow Jones, right? Dow Jones has been in the red a lot. We only had one day where it was in the green. Look at it. Big hit yesterday down to down in the red. But look at the wick on yesterday's candle. Right left of the chart, what is it? Support. How many times has that price been hit and prices turned around? Well, it did yesterday. Look at that red candle. Hit that price level and gave us a candle back to the upside, then came back down again. However, it did react off of support. And that's what I'm trying to get at. So, I wasn't ready to go ahead and give us a bear call on this because I wasn't sure that this was basically what's going to happen here. So, of course, we're into support. So we'll see how this goes. But interesting how we just, continue the mode here. And here we go. This is the index, the Russell 2000. And this is the index. Look at this chart. Isn't this interesting? Really, really interesting. Now, this is just so down, down, down. This would have really been nice for a bear call earlier in the week, but who would have known, traders? We think the market is bullish, but this really came down and did a really nice job yesterday. And these charts were taken after the New York close, so these are current prices. All right, that's about it for our options, my friends. So let's head over and let us talk Forex. Going to talk about two currency pairs. One I've beaten up quite a bit, but we got to get back into it because it's done what I said, and I'm so proud of that. Okay. All right, let's move on. Boy, those coffee beans look good. Almost time for a cup. What do you think? All right, let's head over to the euro-dollar daily chart. We've been talking about this for quite a while now, this euro, and remember, it now is again, second day in a row, closed below the 200 exponential moving average. Folks, it's coming back to what it's been doing for months, and that is we are bearish in the euro dollar. Absolutely bearish, no question about it. We just have to watch this 200 exponential moving average. And again, it's Friday, so we have profit taking and a lot of volatility at open and closing of the markets as we go through our trading day. But I love trading on a Friday. Love it. So much fun. All right, let's move over. Here is our 30-minute chart on the euro. You can see my triangle there, which is all the fibs, and that is my entry zone. I want this to pull back, give me a pullback. Love to it to come up to that 200 exponential moving average. And right under that, what do we have? The daily pivot point. Nice resistance right there. Let's get a bearish candlestick formation there, and I'll be more than happy to short this. I'm not shorting here. This is not the place to short. We're going to be shorting into support. However, if you look at the Williams R% indicator on the bottom of the chart, what is that showing? It wants to go down now. So we'll see. As I'm doing this about an hour and 10 minutes before the London Open. So we'll see how this goes, but I'd really like to see a pullback. That would be great if we can get, an up move and then come on down, and then, in New York, it normally pops up as usual, right? Okay, let's head over to the euro dollar 15-minute chart. A little bit easier, not too bad here. Again, we want to take this bearish. You can see the red arrow, and you can see the entries area, the entry zone there, and that rectangle there. And we just want to take this short. We need this to pull back, give us a nice bearish candle, and let's go short. And I think we have a nice trade set up here also. All right, traders, let's take a look at the triple shot. Here's a triple shot of our 3 time frames, the daily, 60-minute, and 15-minute charts. This is what we're looking at doing, my friends. I know I'm talking fast, just a lot to get through today. Let's go over and talk about the Aussie yen. Just picked that one out of the hat, and yeah, if you're dizzy with all those arrows, yep, so am I. But it was important that I put that arrow in there because if you take this on your platform and look at the Aussie yen, you can see that this is still in an uptrend. However, for the last month and a half, if you look at this, there's a lot of pips here, guys. But if you look at this, this is in a range. It's in an uptrend, but it's been in a range for a long time, and we just have to play this as it is. And to be honest with you, I'm looking to sell this. I'm trading what's in front of me, and we just gotta have to look to sell it. It's in a range, so let's trade what's in front of us. And to me, what's in front of us is we're gonna go bearish. All right, let's take a look at a 60-minute chart, see what we got. 60-minute chart, beautiful, right? Nice setup. There's our arrow to the downside and our rectangle. We want this to pull back into our fib zone. We want to take this down. You can see where my diamond is on the top of the chart. That's where we want to stick our stop. That's right at R1. Nice resistance right there. However, traders, if you get in this trade and this thing goes above the 200 exponential moving average, by all means, get out, right? We're wrong, right? If this comes all the way to the 200 and breaks the 200 on a 60-minute chart and closes, we don't have to wait for it to hit our stop. Just get out of the trade. We're not right. Again, look at the Williams R% indicator on the bottom, and it is bearish. Okay, let's take a look at the Aussie yen on the 15-minute chart, my friends. Here we go. Look at that resistance. Beautiful on the top of this chart. Resistance at the 200 exponential moving average. Deviation level at the settlement level there. Really, really nice. You can see my red arrow. I want to take this to the downside, but really looking good. And if you guys have nothing to do this weekend, you can go to apexinvesting.com and check out the education on the right side of their homepage under deviations and learn about deviation levels. It's a great tool. And if you are using what I think is probably the best platform out there, the Ninja Trader platform, you can have this on your charts automatically daily for $30 per month from Apex Investing. All right, so here we go. We want this to pull up, and it's did a nice job so far. We got a nice bullish candle there, and we're hoping to come up to one of our fib levels here of our rectangle. We're going to take this down. You can see my little blue dot on the bottom of the chart. That's where I want to come for my take profit area. If you look left to the chart, you see why I picked that area. That is previous support, and we want to get out before the deviation level. All right, traders, let's take a triple shot. Here's a triple shot right here on the Aussie yen. I think we have a nice trade set up to the downside. Watch volatility at the opening and closing of markets through our trading session today. Okay. Thank you, my friends, for being with me. Sorry I missed a day and a half bringing you these videos. Technical problems and platform problems, but we're all fixed and we're ready to go. And traders, enjoy your weekend break. Relax, take it easy, and come back fresh start for next week. Traders, this is William Gilday, and they call me Bill. Have a great weekend, my friends, and we'll see you beginning of the week for another video. Take care. From Pattaya, Thailand, we're out of here. Bye-bye.